What's going on, everybody? It's your boy C-Zar, and we are talking about Ethereum today, ETH USD. It's the 19th day of January, and here we are sitting at about $3,200 with 6 hours and 40 minutes left in the day. Hit that like button, subscribe. Thank you all for being here, and let's get into it, okay? Here we are. Right on the precipice, right where we've been for the past week now, of breaking out of this symmetrical triangle. You know, I had somebody recently. I'm not going to name them because I'm not trying to drop names or start fights or anything. But I had somebody recently try to tell me that this is an invalid pattern because you've gone too far through the pattern for it to be valid. As far as I know, in my 10 years of experience, I don't have a whole lot of experience, but I do have 10 years of experience doing this. This is a completely valid pattern. This is so valid. It's the most valid, and it seems as though we are going to break out to the upside. It seems as though the pressure is definitely being built to the upside, not the downside, right? We've got like a flat top here even with ascending lows. I don't care how far in the pattern we are. And from what I've known, the longer that you consolidate in a pattern, the more likely you are to break out with a bigger move. It's not an invalid pattern. I don't know where people are getting this from, but everybody has their own opinions. There's more than one way to skin a cat in this game. From a high to a low, we've been consolidating below the 382 for a little while. When this pressure breaks, we should rapidly approach the golden ratio zone, which is anywhere from about $3,900 to $4,000. Okay, something in that range there. That's the first expectation. There is a complete chance possibility that we do move all the way up to our 786, 886 area instead. And the way that we concoct that little idea is through this Adam and Eve double bottom pattern. If this is an Adam and Eve and it's to be respected, the measure move is to be regarded as such, then that would imply a move that would take us up to about $4,600, which again, from a high to a low here, that is like right at our 886. So it's hard to say. We've got a pretty big range, but like $3,880 to $4,600, something in this range. That's our next target area. And if we keep moving at these paces, you know, I wouldn't be surprised at all if by the end of the month we were up in this area, at least at the low end. If not, certainly in early February we should be up at this end, somewhere around here. I still do believe that Ethereum has a chance of being above $4,000 by the end of January. Okay, that's where my head's at right now. 1 hour time frame. Looking at this here, we have dropped. We had a little bit of volume come in on this drop here. Everything in the space dropped for whatever reason right here on the final hour of Sunday and the opening hour of Monday here. We're moving sideways. We haven't really done too much. This could be a bear flag. We could go lower. What I'm looking for if we do go lower is a slightly lower low with tremendously low volume. We don't want the volume to pick up as we move lower, and we don't want it to be significantly lower, right? We don't want to get too far away from this low if it happens. If we break out and we keep moving up higher, if this is like a BART pattern, that's great too. We'll take that if that comes. But at this moment, I think it would be more likely that Ethereum goes to the downside. So what we're looking for here is a fake out, right? Something that, you know, if we were to move down like this, everybody's excited that there's some kind of bear flag. People panic. They start to sell. They go short. And then that's whenever we move up. Just like last time. Just like whenever Bitcoin here was breaking out of its bear flag, right? Right here. And everybody went panic max bearish right here. Like people were very bearish here. People were more bearish here than they were at this low because we quote unquote broke out of the bear flag. I wouldn't be surprised if we saw a similar result here, and that's why I'm kind of calling for a fake out. Something that might go just below these lows, but then reverse immediately, right? It might be like a double bottom or a slightly lower low, something like that. We look at the 1 hour time frame here, the RSI. The RSI is bear. It's wonky, man. It's weird. I want to say it's bearish, but it's just weird. The stochastics are technically bullish, but I'm not impressed. I would even say bearish. You're moving up here. You're all the way at the overbought zone. You didn't do anything. Imagine you're at the overbought zone, the same area that you were here before you dropped this much. Now you're back here, and you haven't moved up at all. That's pretty bearish, right? The MACD is bearish as well. We look at the 4 hour time frame. Moving down, again, this break happening, there was a lot of volume on a 1 hour basis, but it's really not that much volume. It happens over the weekend, over the long weekend. I think that it's false. You see here how you're finding support right here, just above these levels. Watch us skimp. Let's just fake out this low. We get a little bit lower, and now we're actually finding support on these prior points of resistance here. I mean, there's a lot of support right below these lows. So I'm not 100% confident that that's what we do. But if we do that, that's the kind of reaction I'm looking for. It's just short-lived, fake out to the downside, rapid approach back to the upside. The RSI is bouncing off the oversold zone. That's not a bad thing. That's actually pretty good. You're overall in a downtrend, right? You've got your lower lows and your lower highs here. So maybe you come up, reject your 50 and then come down. Maybe the next couple of days are bullish. We really form this this bear flag a little bit more, and then we break down. I don't know. The stochastics are bearish at the moment, and the MACD is looking bearish as well, crossing below the 0 here. So I do believe there's more to go, but as far as how much more to go, I'm not confident in that. Right? I'm looking for a little move, not a big move. Low to high here. Like if we were to go to the 382, that's fine. 3,100 is fine. If we break below 3,100, I might be a little bit concerned. And when I say a little bit concerned, I really mean a little bit. Like all that would mean if we break below there is that we're probably going down to 29 to 2,800, which I very much don't expect from here. But it's a possibility. Could we go down to $3,100 at the 382 there? Yeah, that's a perfect higher low kind of dynamic right there. I think that's perfect. So absolutely we can. Daily time frame, looking at these indicators, the RSI did have a little bit of bearish divergence. That divergence has been fulfilled as of now. We've got an overall very bullish and dominant uptrend in the RSI here, right? Higher lows, higher highs. And the stochastics had a little bearish divergence as well. You're at the 50, perfect area to bounce. MACD is bullish, but you had some bearish divergence there as well. So hopefully from here, what we don't want to see really is any kind of break of this structure. Again, if we break this structure, it's not problematic. I don't think that means we're going to 0, right? But if we break this structure, that could imply a further drop that does take us back below $3,000, maybe even below $2,800. So something like that, we could have like a double bottom, and that would be nice. But it would just, instead of seeing this $4,000 price by the end of the month, we'd probably start to see that $4,000 price maybe toward the end of February, right? It'd be postponed for a whole month if we were to do something like this. I am nowhere near considering that we're going to go down. Right, like down to these levels here. I'm nowhere near considering that we're going to see prices below $3,000, but that's the risk. That's the probability that we run the risk of having increase should we break below this this trend line here. But we'll see. Time will tell. Normally, I don't care about trend lines. Normally, like lines like this, I don't care for at all. But the fact that you're in such a dominant or a very prominent, I should say, symmetrical triangle pattern here, any kind of break, I'm treating that as a breakout, and that could very well take you to these lower ends here. Anyways, again, that's not the expectation. I do not expect that we break out to the downside. I clearly have stated throughout this whole video I expect that we break out to the upside. We move to anywhere from $3,800 to $4,600, okay, and probably closer to that $4,000, $4,600 level. That's the expectation. That's been the expectation for weeks now. But you know what to look for if I'm wrong, right? It's important to address that as well. I don't really have anything else I want to say, so I'm going to end it there. Hit that like button, subscribe. Thank you all for being here. We're expecting a good month out of February. The fact that January's been somewhat exciting is nice, but it's been kind of stagnant, kind of boring, a know-nothing month right now. That was to be expected. I think that February will be exciting, and March should be exciting as well, and that's whenever the magic will really happen. I very much believe that we, at this point, have a solid chance of seeing new all-time highs for Ethereum by the end of February, if not certainly March. Hit that like button, subscribe. Thank you all for being here. I'll see you on the next one. Okay, take care of yourselves. Bye-bye.